We start our focus now on commodities, talking about agri-commodities, specifically domestic, with Okpeyemi Oguntade, who is a senior investment officer with Financial Derivatives Company. Good morning to you, Okpeyemi. Thank you for coming on the program.
Good morning, Harriet.
So let's start off from the general discussion. Talk to us about this new FX regime and how it will be affecting domestic prices.
Well, let's just have a quick recap of what has happened so far in the last year. So what we had was, the CBN was a bit reluctant to adopt a flexible exchange rate for the 24th of May. They announced that they're going to adopt a more flexible exchange rate. And then on yesterday, they released the guidelines that would follow this. Initially, what we expected was a dual exchange rate, but alas, it was a unified exchange rate they were going for. And so right now, what are the implications on commodities? I guess that's the question you would like to, or rather, the question you would like to ask.
What I asked?
No, you asked. Okay, so right now, in the short term, if we're going by economic theory, what usually follows when you have a shift in your exchange rate regime from a fixed to a floating exchange rate, what you usually have is that you have imported inflation, and this would filter into the prices of commodities. But Nigeria is a different case. This was the case in 1986 when we went under the structural adjustment program, where the naira went from 1 naira to a dollar to 4 naira to a dollar within a week. But right now, what we've seen in Nigeria is the exchange rate has been attacked. We've had speculatory attacks, and so the value of the exchange rate in the market is exaggerated at 370 naira to a dollar. So in the short term, given the fact that the CBN has provided clarity on the exchange rate regime going forward, we should expect that there would be an appreciation of the naira in the market. And if this appreciation does occur, then we should expect that this would filter into the prices of imported commodities, meaning that the prices of imported commodities would decline, and as well as domestic commodities, because if imported commodities are coming down, then domestic commodities that were substitutes for these imported commodities would have to decline as well, because traders at the end of the day are in a business to make profit, and they also would like to retain their customers as well as retain demand and market share.
But then for those commodities that we actually own here, talking about the palm oil, for instance, talking about cassava, that's Gary, beans, we noticed that the prices have continued to oscillate around a particular level. Talk to us a little bit more about that.
Well, the reason why we saw an increase in the prices of the commodities we own here in Nigeria is because there was an increase in cost of living driven by the foreign exchange crisis. And as a result of that, we had farmers trying to increase prices to meet up with their cost of living. So that's why they were oscillating around that price, like you rightly mentioned. But now that the CBN has provided clarity on the exchange rate, what we should expect is that prices should be the clarity should filter into a decline in prices of commodities in the market. But in the long run, however, if we're looking at what is going to happen to commodity prices, at the end of the day, the reason why we saw the depreciation in the foreign exchange market was because of the lack of availability of the dollar. And so many are still concerned about if the inflows will be able to meet the demand for foreign exchange. We know that oil is one of our major sources of forex earnings, and as at this morning, Niger Delta militants have bumped another pipeline in Akwa Ibom. And these are some of the worries that we analysts are considering in going forward, because if the dollar isn't available for us to meet the demand for foreign exchange, then we might just as well find ourselves in another crisis again, even with this unified exchange rate. So the government definitely needs to consider how we're going to manage inflows and ensure that the dollar is readily available for trade in the market.
Managing inflows and making the dollars readily available. Thank you so much, Okpeyemi, for coming on the program this morning.